Hi Tamal, thanks for coming on the show.
Thank you, Ishan.
Now, this week's column talks about the tenure of CEOs, which was decided last year, something at the end of last year. Now, one of the things that I found interesting was at the private banks, CEOs and MDs have served for over a decade. Why limit the terms of public sector banks?
I mean, you need to ask that to the government. Why decade? Aditya Puri ran HDFC Bank probably for 26 years. 26 years. He's the, if I'm not mistaken, largest serving bank CEO of a bank of that size globally. 10 years is better than 5 years because earlier it was capped at 5 years, 3 years, then you could get an extension of 2 years. So it's become now 10 years, but the 60 years superannuation at 60 remains. Public sector banks, right from pay structure to tenure, everything is linked to the IES civil service. So unless you delink, you can't you can't do this. So 10-year is better than 5-year, that much I can say, but is 10-year enough? Certainly not. Incidentally, Reserve Bank of India now has reworked the tenure of the private banks. I think now at one stage one can have 15 years. So 15 years, and then one can return again after some gap. And the retirement age there at 70, in contrast to 16 public sector banks. So that's the thing. It's 15 years versus 10 years and 70 years versus 60 years.
Another interesting facet that I found from your column was, does this tenure suffice? Because you said a lot of executive directors that are to be at the helm are in their 50s. If they're in their 50s, by the time the appointment takes place with all the delays, as you highlight, 264 days in one case, 118 days in another case, wouldn't it actually be a less than a 5-year tenure or something?
No, a delay part used to happen. It's not happening anymore. It's now it's pretty proactive. Much in advance. The names are announced. The recommendations have been done in the public domain, and they do join on time. So delay used to happen till recently. So this 10-year tenure or 5+5. It's applicable to all the whole-time directors on the board, which means both MD and CEO as well as the EDs. Probably the trigger is what is happening now for the last decade or so. The promotion process in the public sector bank is pretty fast. Earlier, you would not get a general manager in less than 55. Now you are getting general managers in their 40s and EDs in their early 50s and at least in one case late 40s. And the positions have become much less because of the consolidation. There are 11 nationalized banks now after this consolidation drive. And you take State Bank of India, but State Bank of India has a different rule. Only an insider becomes an SBI chairman, and they're governed by a different act. Now this, suddenly there's only 11 top positions, okay? And there are ED, so the number of EDs also, yes, the number of EDs are 2, 3, 4, depending on the size of the bank. But again, because the number of banks have shrunk, so that top level positions have shrunk. And that's the primary reason of government coming up with this extension of the tenure. So State Bank of India is still continuing this 5-year thing, while this nationalized banks have gone to 10 years. So I would like to believe it should be extended to state banks also, State Bank also.
Another concern that comes from your book, not from your column so much, was that in the last few years of a CEO, this is a trend that somebody observed and you write it in your book, that in the last few years of the CEO, growth are dispersed at breakneck speeds. And as a new CEO comes in, a cleanup starts. Does a 10-year cycle change that as well? Or no, that remains the same with it?
No, I think with a longer period, it comes more responsibility. So yeah, you are right. The cycle had been not in the current term, but till recently it was the case that if you are because people are, I mean, they were the CEOs even for 2 years, even less than 2 years. So typically, what happens when somebody comes, takes over, then the first thing is that everything was wrong, not right with the bank. That's how you earn the respect from the investors. So you start a cleanup drive, and then your NPS goes up. You do provision, etc., etc. And then as that time to retire comes, knocks on the door, you want to leave with a happy note. So you do the same thing what your predecessor had allegedly done. So that cycle will definitely be now on exist. If somebody is not fit and proper, not morally, not ethically, or not in the governance thing, like fraud happens, even though they are rare, they don't get another term, or they are even asked to leave before their term ends. But you never hear a person is shown the door for inefficiency. I think we need to look at that.
You say there needs to be a comprehensive policy for financial sector to attract talent. One, do we need lateral entry for PSBs? And two, is there a need to revisit the compensation structure?
Yeah, when I said financial sector, I also included the All India financial institutions like SIDBI, NABARD, Exim Bank, etc. Should their CEOs be picked up from the market? Yes, that experiment was done. In fact, Bank of Baroda had Jay Kumar, and then IDBI Bank, the current CEO, also were picked up from the market. But unfortunately, that was only one instance at one round. After that, I think it's not happening anymore. And how do you get market from a right kind of person from the market? Because the third part of what you mentioned is this: where is the market-related salary? If you look at the salary structure in public and private sector, at the lower level, public sector bankers get higher salary than their counterparts in private sector. But as you go up the ladder, the difference becomes very stark. And at the top, it's hugely different.
Finally, one key question: should the government be in the business of banking?
Well, for that matter, why banking? For any business. Prime Minister Mr. Narendra Modi had said that government has no business to be to remain in business, to run businesses. So, and as you know, that 2021 budget spoke about privatizing two banks, two public sector banks, two nationalized banks, but nothing has happened till now. There is so many constraints for a government-run bank. So, and at the same time, you expect them to run business like the private sector banks, because they are listed entities and the investors have the interest. I mean, they need to make money by investing in the stocks. So that's not possible. So probably, and which I think it's a generally accepted theory, is this: government should have certain banks owned by government, and those banks probably should have the purpose should not be run like a business entities, but as a vehicle to address the socio-economic issues.
Thanks, Tamal. Thanks for coming on the show. We hope your book does well. Thank you again.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.